Broadcom just stunned Wall Street, and AVGO stock is moving in a way that has investors split right down the middle. Some are calling this the start of another massive surge fueled by AI demand, while others think the stock has finally reached a point where even great earnings might not be enough to push it higher. But here's the thing: Broadcom didn't just report solid numbers. They revealed a level of growth in their AI and semiconductor segments that nobody saw coming, and the market's reaction has been anything but quiet. In this video, we're going to break down exactly what happened in Broadcom's latest earnings, why AVGO stock is behaving the way it is, and whether this could be the beginning of something big. Broadcom isn't just some chip company. In fact, they're one of the few giants powering the backbone of global data centers, AI infrastructure, and now enterprise software after the massive VMware integration. That combination makes AVGO one of the most influential players in the entire semiconductor world, and its latest earnings prove just how deeply it's tied to the future of AI. Today, I'm going to walk you through the revenue numbers, the surprise growth areas, what the CEO said that turned heads, and how the stock is reacting in real time. We'll examine whether AVGO remains undervalued, whether it's being driven solely by AI hype, or if this momentum is supported by genuine long-term fundamentals. If you're holding AVGO, thinking of buying, or just following the AI stock boom, this breakdown will help you understand exactly what is happening with Broadcom's business and where the stock could be headed next. Broadcom's latest earnings report came in with a level of strength that immediately grabbed Wall Street's attention, and the numbers tell an obvious story. This company is firing on every major cylinder. Revenue came in above expectations, powered heavily by explosive growth in its AI-focused semiconductor division. While analysts were expecting steady performance, Broadcom delivered something far better: double-digit increases in networking chips, custom silicon solutions, and cloud-related hardware. EPS also surprised to the upside, showing that Broadcom is not only growing revenue but doing so efficiently, with strong margins despite industry-wide cost pressure. One of the biggest highlights of the call was Broadcom's update on AI revenue contribution. Management revealed that AI-related products now make up a dramatically larger portion of total sales than before, signaling that Broadcom is solidifying its position as a behind-the-scenes powerhouse supplying hyperscale customers. The company also provided a color for the VMware integration. While still early, the shift toward recurring software revenue is already improving financial stability and adding a layer of predictability that investors love. CEO Hock Tan emphasized continued demand for custom AI accelerators, advanced networking chips, and enterprise software solutions, making it clear that Broadcom sees strong momentum throughout the next fiscal year. Overall, these earnings were not just a beat, they were a statement that Broadcom is becoming one of the central players in the AI infrastructure boom. Right after Broadcom released its earnings, AVGO stock reacted almost instantly, and the market's response gives us a lot to unpack. In the first few hours of trading, we saw a sharp spike as investors digested the stronger-than-expected results. This reaction wasn't just about revenue or EPS, it was about Broadcom proving that its AI strategy is working faster than many had predicted. Traders saw the AI-related momentum and piled in aggressively, pushing the stock upward and breaking through key technical levels that had previously acted as resistance. On the technical side, AVGO climbed above its short-term moving averages, confirming a renewed bullish trend after a period of consolidation. Analysts also started raising price targets almost immediately, with several firms praising Broadcom's AI exposure, strong margins, and the early success of VMware integration. Many pointed out that Broadcom's diversified model is becoming a real advantage compared to competitors who depend heavily on just one or two product cycles. However, not everyone is convinced. Some analysts believe the stock's rally is running a bit too hot, especially given AVGO's strong performance throughout the year. They argue that while the earnings were impressive, a lot of the optimism might already be priced in. But for now, the momentum is clearly on the bullish side. AVGO's post-earnings price action reflects a market that sees Broadcom not just as a chip maker but as an AI infrastructure leader, and that perception alone has been enough to push the stock into a new zone of excitement. If you really want to understand why Broadcom is gaining so much attention right now, you have to look at what is happening in the AI world, and Broadcom is positioned right at the center of it. The company's biggest growth driver is its custom AI chips and networking solutions built specifically for hyperscale cloud providers like Amazon, Google, and Meta. These companies are in a race to build the fastest, most scalable AI training and inference systems, and Broadcom is one of the few companies capable of delivering the specialized high-performance hardware they need. Unlike Nvidia, which focuses on selling GPUs to the broader market, Broadcom has carved out a unique niche, designing custom accelerators and networking components that hyperscalers use to optimize AI workloads. This makes Broadcom deeply integrated into the long-term AI infrastructure plans of the world's largest tech companies. Another major element is networking. As AI models grow more complex, the demand for high-speed data transfer inside massive data centers has exploded. Broadcom's advanced networking chips and optical solutions are becoming essential for keeping these systems running efficiently. Add to that the VMware acquisition, which brings in a massive software ecosystem that aligns directly with enterprise AI, cloud adoption, and virtualized environments. All of this means Broadcom is benefiting from AI by accident. It is strategically woven into the foundation of how AI is built, scaled, and deployed around the world. This is why investors are increasingly viewing AVGO as a long-term AI infrastructure powerhouse. Broadcom's recent performance raises a question a lot of investors are asking. With the stock climbing this fast, is AVGO still a reasonable buy, or has it become overpriced? Let's break it down. First, AVGO's valuation isn't as extreme as some might expect from a company heavily tied to the AI boom. Its forward P/E ratio sits lower than Nvidia's and is even more reasonable compared to smaller competitors like AMD. That suggests the market still sees Broadcom as a mature, stable business rather than a speculative AI rocket ship, even though its growth numbers are increasingly looking like one. What strengthens Broadcom's valuation is its mix of semiconductor hardware and recurring software revenue from VMware. This hybrid model lowers risk and boosts predictability, something long-term investors value heavily. On top of that, Broadcom continues to deliver strong dividends and consistent share buybacks, which add another layer of shareholder value. The bull case argues that if Broadcom's AI demand continues to accelerate and early signs suggest it will, the current valuation could actually be cheap relative to future earnings. The bear case warns that the stock has risen quickly, and any slowdown in hyperscaler spending could cool momentum. Ultimately, whether AVGO is overpriced depends on how you view the next several years of AI growth. If you believe the AI infrastructure boom is just beginning, Broadcom is still trading at a reasonable level. But if you think spending will slow down, the valuation might start to look stretched. Right now, the evidence leans toward continued strength. Even with Broadcom's strong earnings and AI momentum, no stock is without risk, and investors should be aware of the potential challenges that could impact AVGO in the coming quarters. One of the biggest risks comes from competition. Companies like Nvidia and AMD are aggressively expanding into custom hardware solutions, and if they gain ground in hyperscaler partnerships, Broadcom could face pricing or design pressure. Another risk lies in the VMware integration. While early signs look positive, integrating a massive software business into a hardware-driven company is never simple. Any execution issues, customer churn, or transition delays could slow Broadcom's software growth trajectory. Broadcom is also heavily tied to hyperscaler spending cycles, meaning Amazon, Google, and Meta hold significant influence over future revenue. If these companies temporarily slow CapEx spending even for a quarter or two, it could impact Broadcom's momentum. Then there's the geopolitical angle. Broadcom relies on global supply chains, and any disruption involving Taiwan, China, or international semiconductor policies could create bottlenecks or increase costs. Finally, valuation risk is something investors can't ignore. After a strong rally, the market becomes more sensitive to even small disappointments. A slight miss on guidance or a softer AI outlook could trigger volatility. In short, Broadcom is an incredibly strong company with huge potential, but investors should approach it with a balanced mindset. Understanding these risks helps create a more realistic picture of where AVGO could be headed next and ensures you make decisions based on the full story, not just the hype.